Boom, we are alive, ladies and gentlemen. Thank you for joining us this evening. We're going to have a longer, rant live episodes. If you're watching this later in the future, right now we can zoom in, zoom out, zoom back in. We do a little bit of a market overview, kind of a macro think process near the end where we go over kind of metaverse, P to E, the guilds, all this kind of fun stuff, just a general conversation. But for now, let's start in one of our main points of the day by looking at the fear and greed index for Bitcoin. So, boom, reason why do we watch this? Why do we care what people feel in a market based off of fundamentals? Well, largely because people's feelings make a big difference on how the price of something is viewed. So right now, everyone's feeling pretty fearful. This is actually a positive sentiment. You'll hear quotes like this: "Buy when others are fearful and sell when others are greedy," effectively. Now, long term, we think just accumulating is a much better game than selling. So the underlying, again, fundamental here is that we know they're degrading currencies. So regardless of what the fear is at here, it's actually a much bigger fear to remain in a liability like a US dollar as in comparison to any of the other asset choices that are out there. So we picked Bitcoin for this conversation. Looking at the 3-month here for the crypto fear and greed, we are back in the 30 to 20 range. Again, over the multi-year time frames, when we start to look at this, every time we've been near the 20 to 30 range, this has been the LPS ranges in this channel so far. So we like to use the Wyckoff sentiments to take a look at everything, and we've been charting what I believe is an accumulation range still. We could be proven wrong. So over the last 2 weeks, we were looking for this 48,000 mark. We've hit it, and we've been finding support around this area. One of the things I think we're witnessing is a very similar fractal to the previous LPS. So again, 2 things to highlight here. Number 1, we are down here on the right-hand side of the screen, pretty much as slow as we were in all of the previous run-ups in the fear and greed index. And on the max chart here too, you can see this area, when we hit 10 on March 30th, this is approximately 15 days after the WHO declared a public health concern of an international, whatever nonsense that was. So because of that, we dipped down around 10. This is a fairly low marker for Bitcoin's fear. But again, remember, we're actually pretty close to that now. We're sitting at 16. So our fear relationship to the market right now is equivalent to that in which the pandemic first started. And I can tell you for one thing, I feel much less concerned about the whole thing. It seems actually relatively easy to deal with and treat. So on to the next part of the conversation is that if everyone is so fearful and we think we're witnessing an LPS range, not just in here, what do we want to do? Well, we want to look at Glassnode's data of the open supply of Bitcoin on the markets. Why do we do that? Well, we like knowing how much Bitcoin there is in the open supply because it increases the volatility of the market, or decreases. Currently, because we are so low, we're going to see dramatic volatility in any price movement, up or down. And this has been the continuation of the bull market. So if we actually scroll back out here, this top of the line of the orange right here, this was the most amount of supply that came out onto the open market on March 11th, March 13th. So again, this was the days that the WHO was declaring the public health emergency of international concern. This was the height of the fear moment in the supply itself. So as we've seen the supply on the markets decrease ever since, we've seen the volatility in the price increase. This is generally how this looks. Now, again, they're not perfectly aligned. They vary, but this is generally what it looks like. Again, the peak of supply at this moment was then the lowest price. Again, same here, back January 2019. The peak of supply for that moment was the lowest price. Here we actually saw a run-up of slight price decrease and a massive supply start to come into the market. Bam. And this was our final spring right here. So this is what we would look at when we look at a much larger range. So we're not even looking at the entirety of this Bitcoin chart. What we are just doing right now is looking at this total trading range. This looks like an LPS to me. It looks like a fractal. We're seeing a few key indicators of that. Again, the decreasing supply on the market still is a good sign. Again, I'm not a big enough whale to chew up this. This is hundreds of millions of dollars. on a pretty frequent basis. So hats off to Michael Saylor for being such a great accumulator of Bitcoin, showing everybody how it's done. Just keep buying more assets. Pretty safe bet there. We like to venture outside of that a little bit and look at the venture capital sector. There's been a lot of great news for Avalanche lately as well. Avalanche is in a very unique position. So what I want you to note right now is yeah, there we go. It's a little bit easier to see it. Look at the structure of this, what I believe to be accumulation cylinder. And then look at Avalanche. Now, for those of you that are fans of this show, you will know that I am super bullish on Avalanche. I've said consistently that I think Avalanche has the potential to subvert Ethereum. And we're seeing a really strong signal in the last 24 to 48 hours for Avalanche. Now, let's look at a few factors and ideas from a fundamental standpoint. If we go to Three Arrows Capital, one of the biggest funds in this sector, one of the things we're going to note is on the left-hand side of this screen, it says Avalanche as a base layer, and it's right at the top of the list. Now, what's nice here is that this is all in alphabetical order, but Avalanche is still highlighted. One of the reasons why we picked Arcane Bear as a name is because originally when we were trying to be a podcast, majority speaking, we knew that if we started with the letter A, we were going to show up first in the alphabetical order, either that with a number. So Arcane was the first word I was super excited about in the thesaurus there. So it's nice to see Avalanche at the top of Three Arrows Capital list here right now. Again, this is in alphabetical order, so clearly it doesn't mean it's their biggest holding by any means. But I'd just like to pay homage to my interest in what I think this technology can do. Again, I'm really only able to grasp what other people tell me and then try to learn from that process, which is why we have so many great guests on. If you haven't seen the podcast we did with Emin, the founder of Avalanche, I suggest you check it out. It would be somewhere around the video screen where you should subscribe to the channel if you haven't yet done that. So Avalanche to me looks like it's actually in one of these Livermore accumulation cycles that we looked at. Now, this is a very finicky area, and I wouldn't bet super heavily on it at this point. Why? Well, because we've actually already made some really significant entries. Let's look at the previous accumulation cycle back here in May. Okay, so this was a really fun time here. This is back in May, June, July, August. We had a nice accumulation channel, a nice spring, and then this widening body of an accumulation cylinder on the outside. On these small time frames versus the big time frames, it's actually a little bit hard to tell. These assets are so new. You're not always going to find the reliability of a much bigger liquid asset. There's so many abstractions in the distribution of early venture capital as well. So for instance, if and when new Avalanche supply comes onto the market, it could affect the price significantly, right? This is what we see with Bitcoin. As that supply decreases on the open market, it tries to draw out the rest of the market supply and effectively push it into a place where it. Oh, hold on a sec here. What is this? Oh yeah. So it tries to the market will try to draw out that extra supply through these price fluctuations. This is why we think macro investing is so much more important than short time horizons, and it's led to much better results for myself by focusing on again understanding the technical dynamics of a chart versus the fundamentals of the psychological aspect and the long-winded nature of that psychology too, right? Again, we've gone over multiple times the multiple decades it would have taken to just accumulate good assets on multiple other fields where you're looking at 100x returns, maybe even 1,000 to even higher X returns in the early venture capital stage. But Avalanche, so what am I getting at here? Why the long-winded rant? Well, these Livermore patterns, these accumulation patterns can be very powerful. We saw them out of Ethereum and Bitcoin over their, the exit out of their trading range back in 2020, the start of 2020, March there effectively. So just for fun, if we want to, let's open up this chart. This will be a fun little sharing of info. Ethereum, I think it's this one. We're going to have to go to the 3-day, ladies and gentlemen. We're going to get a much broader view. of Ethereum here. There we go. There's that accumulation cylinder. So one of the reasons why we were so bullish about Ethereum back in 2020 was actually these rising accumulation cylinders to the back of. So here it is highlighted by itself. We'll look at the rest of the trading range, but just as an instance again. So you have your point 1, 2, 3, 4, 5, 6, and then it couldn't even come down for the 7th touch point, and then it exploded. This is a really, really common signal that we see out of the back of a trading range. So if we look at the rest of the chart we had for Ethereum, there we go. We're going to need more time than that now. It's been a while. Here's the monthly chart. Yes, ladies and gentlemen, here's the monthly chart. This is going to be fun. It's been a while since we looked at this. Okay, so here's the thesis for why we've been so bullish on this market up to this point. And we get caught up in the minutia on like even on the day-to-day. Like look how very little of that. We pretty much have to go out to the month to look at it. Let's do a week here. It's going to give us a better perspective of the smaller time frame. There we go. Okay, so here's the story that brought us to this bullish moment, and also why you'll want to be careful too. Like we are very high up in the market cycle right now. If you're new to this market, effectively understanding these larger market cycle dynamics is so important. One of the reasons why we are so bullish is not because of how high we are now. Like you got to remember when we're looking at these trading ranges, the distribution potential here, like we're super freaking high on all of this stuff. Everybody's freaking high on inflation, basically 3,500%. Now, again, if you've taken the chance to look at some of these books like Dying of Money, which I'm almost finished here, reading slowly. It's not a super fun book, but very educational. There are a lot of sequence of events that are taking place now, today, that have happened in previous inflation cycles, again, in multiple cultures and across borders. So it's a very interesting process that we're witnessing. But because we're so high up, first off, if you're new to investing, you need to take a month-by-month approach. You need to figure out what you can do to generate revenue through the things that you love doing with your time and your energy and your passion and your community. Do that. And then with your investment skill, invest in really smart long-term ideas. And in this sector, you're so lucky for the opportunity. We are so lucky for the opportunity for this to basically all be like venture capital. Just as we were looking at Ethereum, the first time I bought Ethereum was $40 back in early 2017. So because of the nature of these long-term cycles, it was way back here, this circle that we're looking at. This is that accumulation cylinder that we had highlighted on that previous page. Now, this moment here, you can go back in all of our videos, and we were super excited. Here's the trading range that started all of it. Ladies and gentlemen, this is a moment in history that just went basically 100x across the board for almost everything in this ecosystem. This is a great moment. So what's the point of what I'm trying to relate to between these two ideas? Okay, so we're looking at the macro perspective of an investment that's already done a 33 to 50x. Like the gains that we've made since our initial entries are ridiculous, right? So don't be greedy up here. That's the nature of this game. In fact, you'd want to have a well-balanced approach to the next 5 or 10 years. I don't think the bull market is done. I think we're going to get one more crazy freaking peak out here based off this smaller infrastructure that we're looking at, not just on Bitcoin, but on Ethereum and across the board. So this has been the smaller version of that story that we've been watching on the trading ranges that brought us to this moment that makes us still feel bullish. That we are getting a technical indicator of one more final, what looks like an accumulation range, which would be, again, the likelihood that what we are in is the finalization of a very truncated wave 4 to what will probably be a fairly freaking interesting wave 5. And again, the fundamental for that is not that the market is insane, it's that the Federal Reserve is printing money, and that is insane. So the market right now is reflecting the insanity of the inflation and it looking for places to go. That's why we're witnessing so much. So ultimately, we see these more bullish, or we see these bullish signs in a few parts of the ecosystem, but also again recognize, just as we had looked at in the previous Ethereum chart, we're super high since the original entries when we started telling everyone we're bullish. Here's the accumulation range. We're going up. And that was really exciting. It was super invigorating to learn so much about buying when there's blood in the streets. You can watch my videos where I was even in the delusion and the psychosis of the apocalyptic moment of the world maybe coming to a standstill or some shit. Like the first week of March, like March 11th to 15th, like close to my birthday week or whatever, is just, anyways, very noticeable psychological moment in history. And everyone was going through it. And this is effectively when you want to start your investment thesis. And it's crazy to think, a little sociopathic, but technically this is when all the best investing starts, is right when people hit that peak fear moment. And when we're looking at it again today, this is the interesting thing about how fear is measured in market dynamics, is that we're witnessing a fairly paralleled emotional aspect of fear within the general market, at least for Bitcoin at the moment. So we're going to finalize again with a few things. I want to get to Star Atlas, but just because we're going to do a longer episode and we'll chat with you guys, and we're just going to give you my full kind of market macro sentiment. I don't try to inundate you with noise and news and, oh my God, everything's changing, the price is it's not, I don't think it's healthy for a good investment strategy. Some people are good at trading like that. I can do it every now and then. It's kind of fun, but there's a much easier approach to success that I think is a more holistic and enjoyable approach, especially if you're like me, who just likes researching, generally speaking. Okay, so Atlas, the metaverse, play to earn guilds. The next few weeks, it's kind of what we're going to be diving into a little bit more. I just think there's a lot on the horizon for these emergent technologies for adoption. I don't want to get into Star Atlas's price too much. For those of you that are in the private group, you'll recognize, again, we've had some really strong bottom indicators in a few of these other assets too. It couldn't push the price lower, and it did try, again, which gives the appearance of a last point of supply, or an LPS, which is, again, what we're looking for right now is an LPS into this 45K range, or 47 to 48, very similar, boom. And then we likely get a jump to around 56K. If we get to 53 and we can't hold above and we start to come back down, we could see a big finish to the cycle. And even still here, we could drop lower, but ultimately for me, all that means is just keep buying more, nothing else. It just means, oh my God, an opportunity to acquire more assets in what's going to be an unimaginably large new ecosystem for people to participate in, where the majority of the friction has been taken away from the financial sector. So huge opportunities here still in all of this sector. So one of the things I want to point out in Atlas is not the price, but their style. Again, I'm new to the video game sector. I'm learning, and I'm also new to adapting the idea that the gaming sector has the potential to provide like social impact. That's really unique, especially if you followed this channel. We like social impact tech platforms like Kiva. If you've never been to Kiva, go to kiva.org, check them out. They're a 501(c)(3) that gives and they don't sponsor any of this. I know this is about to sound like an advertisement almost. No, I love Kiva. There's an amazing micro lending platform, and they help out entrepreneurs around the world. If you've never tried this, you can go to arcanebear.com/Kiva and sign up. Again, the only reason we do that is because we'll sign you up under the Arcane Bear family, and we make contributions and donations. So what I'll do at the end of the episode is we'll sign in and we'll loan some money to a budding entrepreneur somewhere around the world. But what I like about Star Atlas is that, okay, again, this is what I'm trying to compare here is like a tech UI designed for marketplace and social impact. What's unique about the video game sector is, even though it's not directly aimed at social impact, it's been having that effect. What Axis has shown us with a workforce that extends across borders. There are lots of places in the world where making $20, $30 a day is really good for that person. And if they can maybe do that in an extra few hours within playing a video game, the opportunity here in this sector is immense. Not just for the people who might not have the opportunity for work. Like, we've been having conversations with a good friend of ours named Lual. Check him out, by the way. He's got an amazing story. First off, I think it's probably the most important part there. But the idea that you can help people through gaming is new to me. but I've fallen in love with it because of the social impact, and especially because it's not necessarily aimed at social impact. Like, it's a video game. The fact that you can earn assets and rewards in the video game is kind of a byproduct and a symptomatic effect of participation growth, right? So it has this allure of a few different ideas that are taking place. So it's been fun to watch the evolution of like the different characters, the kind of ships that have come out, the marketplace again too, that they've been building here for buying these ships, the trying to understand what would happen. Again, we don't know who's going to be successful or not, right? We always look for visionaries and visionary ideas. And we always want to break down the boundaries and walls of what we're interested in. So in early 2020, it was pretty much only layer one. We were like Avalanche, Solana, and DeFi. And that did amazingly well for us. What I like about the gaming sector, again, is it provides an on-ramp for people around the world to participate in a video game. Now, they may not be able to get a bank account. They may not be able to open and get a bank card. So because of that, if they have a phone, which most people have, they can participate. Now, so Luau, I'll share a bit of his story. I don't want to butcher it, so I won't try to share too much of it. Luau grew up, him and his mother were escaping Sudan. They ended up in a refugee camp. And through this process, he learned how to code, and he made a game. And in the game, there's in-app purchases that make contributions to the refugee camps. What's unique about these games is that people in the refugee camps don't really have a great opportunity for working. Where they're going to work, and they're in intermediary moment. Almost everybody has a mobile phone nowadays, and the play to earn sector is a unique kind of deflationary moment where if people can make more money playing a video game than they could by working in a regular store, what does that mean for our old financial system? It means it's dead. Inflation has basically robbed everyone. And this is what it looks like when people participate in an economy that doesn't have that friction, doesn't have that middleman, and can own the assets that they are participating in. You were never rewarded for Facebook or Instagram or Twitter, none of it, but we were made valuable. We were made YouTube valuable. So this new evolution of participation of people within a community doing things they like. Again, people spend thousands of hours inside video games playing around. So this kind of marketplace, the interest into this tech UI, UX design of onboarding entrepreneurs and interesting people that are probably also programmers and developers and artists. So there's a really unique synergy of a lot of things that I like in this sector that have come into place. So ultimately, alongside a few other people, this is a really bullish place to be in. Now, again, in the gaming sector versus the L1, when we're bullish on Avalanche, it's much different. We have a technical feeling. Here, it's an emotional one. These are intuitive investments. Star Atlas has a mini game coming out on their way soon too. I suggest following them. I'm not super. It's always difficult to keep up. There's so many interesting things happening. We just try to keep the macro perspective, and again the developing ecosystem too. There's a lot of really cool games that are going to come out. There's a lot of really cool versions of how those games function that are going to come out. So I think it's just ultimately continuing to do your own individual research and sharing in the journey that we go through as well. That's why we like to do these videos. So big hats off to Star Atlas again as well for just pulling such a unique vision to the table for the idea, right? I think they've been making a lot of great success. I don't know what date this game is supposed to launch. Again, I suggest just following them. It's much easier to get that data from them. I don't need to be prepared with that specifics. I trust that you guys got this. You guys ever have that friend where he asks you a question when you like, don't you know how to look stuff up too though? Like, no, the exact date I don't know. I'm sorry, that's not my job. They've got a mini game coming out. I'm not really too concerned about time. Too many people. I have like a 5 to 10 year horizon on pretty much everything I'm doing right now. It's the only way to think. Okay. So let's turn it over to. There was one more thing I think I want to talk about. Oh yes, the finality part here, which is actually just the general sentiments around markets as a whole. I think that when we look at things like the S&P 500, the US dollar chart, it puts us into a bit of a different rant mode. We're currently in an ecosystem that we like. So that we will see a little bit of confirmation bias in my thesis and everything that we go over. Here in the S&P 500 and the dollar, the volatility index, we do not see a confirmation bias in my thesis because I'm not bullish on the traditional ecosystem. I think it is right with flaws and corruption at a pretty high level, apparently too. So, being that as it may, we'll give you this one. So this is the S&P 500. This down here is April. This is that big supply shock that we saw. This is that kind of peak fear moment. And every day since the pandemic started, we've been going basically straight up. So you might say to yourself, as any rational person would, Tio, that makes no sense. We closed down all these family businesses and we all basically had to sit at home for a bunch of time and listen to what a bunch of bureaucrats told us to do, even whether it was a good idea or not. And I go, well, that's exactly true. You're exactly right in that sentiment. Why would the market be going up? It's totally illogical. Right. It's because it's totally illogical. This makes no sense. So where is it coming from? If there's distortion in the market, it's coming from inflation. Inflation is distortion in the market, and it highlights and privies people that you don't want usually having some positive sense coming to you from the market. So I want to read something. I always talk about this book. I hope some of you start reading it or are reading it or will read it eventually. But I have a quote here highlighted on my little Steve Jobs note tab. The invariable habit of inflation is to stimulate non-productive activities at the expense of productive ones, which means that inflation is invariably a subsidy by the productive citizens to the non-productive citizens. There are a few aspects here of understanding kind of, I guess, how this fell apart as well. It says, inflation has no tendency to stimulate activity at its most, but it does actually quite the opposite. One of the most important things to understand is that we've seen inflation before. This is not new. So when the market is just going up and there's no real reason for it, the distortion is coming from inflation. So as we look at this relative absurdity and we ask ourselves, how long can it go on for? The question is a lot longer. This story where we're at right now, if you measure it and compare it against other stories, we actually only just begun. So we're going to take a longer look at this, and we want to compare our fundamental thesis again for why we think we've got more bull market left too, even though this is absurdly priced. The price is super high. Okay, well, the degradation of the dollar is creating the view of inflation, which makes it look like prices of things are going up, right? So, hey, yay, there's a bunch more millionaires and multimillionaires, and there's more billionaires now than ever. This is largely the distortion of inflation. It's a pretty fun party, but one day it does break. Now, again, I don't think it breaks today. I don't think it breaks in the next 3 to 5 years. 10 years out, the US dollar is probably pretty close to and done. It just won't be able to go any further, and inflation will be rampant and noticeable absolutely everywhere in the world. Currently, though, inflation is actually hiding in different places around the world because that US dollar currency can go and invest itself anywhere on the planet, effectively, right? So that consumer index inflation isn't showing up right in front of your eyes because it's finding other places to invest where you don't probably live. So we're probably nicer than where you live often. Anyways, okay, back to the chart here. So this is the S&P 500. This is the S&P 500 on drugs. So we are going to compare we're going to compare financials here. So we like to compare to the M2, the monetary supply. This orange line moving through the screen is the monetary supply. This is the rate of inflation. And lo and behold here, this incredibly large increase in the monetary supply of approximately 30 to 6. Okay, yeah, we're actually sitting at over 100% increase. Oh, when this rooster comes home to roost or whatever, I don't know how they say it. It's gonna be a banger. Okay, so since March, pretty much of 2020, they've increased the monetary supply by almost 100%, just a little over 100%. It looks like, and almost between the months of March, April, May, they increased it by 30 to 40% alone. This is what makes the US dollar a liability. And look at the relationship between the fucking S&P 500 and the monetary supply. You tell me, is this a chicken or an egg scenario? Why is the market going up? Because they're printing dollars or effectively creating inflation through the monetary supply. And as long as they do that, it's just going to only go up. And it actually can probably happen for quite a bit longer than we'd anticipate, because all that money is flooding into unique random islands in the fucking middle of the South Asian Pacific or the Bahamas. It's not flooding back into the US economy necessarily. Anyways, the point of this story is the reason we look at the S&P 500 like this, the reason why we try to always return to this, is that this is the fundamental for investing in Bitcoin. Some of the other things, the play to earn sector, we're doing that because we like venture capital. I want to share the separation of that. The fun thing for me is when I first found Bitcoin, that was venture capital. This is the first year Bitcoin went public, so I got to partake in basically a decentralized public offering, which was Bitcoin in 2020. And this is the unique perspective, is that when you invest early, you get called crazy. It's the crazy thing to do. It's the nonsensical thing to do, is to spend money on video games. But it's also the fun thing, and also a sign of where we're at in the boom bust cycle of massive inflation. And you shouldn't ignore that. Now, again, we've probably got a few more years here, but just recognize that there will become a time when these markets go bust again. I don't think it's today. I think they're going to continue to print to keep this fucker afloat for a little bit longer here, but it's worth keeping in mind. So the S&P 500, again, very, very closely following along our monetary supply. As we get closer, it's going to change because the monetary supply is on a percentage base, not on a dollar base. Here we go. We see what I believe is a very important part of probably where the Bitcoin cycle is at too. So we'll want to keep an eye on this. I do believe they just approved like 2.5 trillion more dollars in spending or something ridiculous. So we've got a few gradients here that we want to keep an eye on. Probably something like this, that there's a trading range that could take place here at a larger basis, and it would come down. If it doesn't, if this just continues to jump up above here, we are basically in such a high level of senselessness on such a broad spectrum of people that the markets could just continue to go up almost unabated until the mass psychosis stops. That's my statement. I'm gonna drop it at that for now, at least for the traditional markets. We could look at the dollar index. It's still not catching up. A lot of that inflation isn't being seen in the U.S. public economy. It's moving to other places in the world. So it's not it's not as fast as you would think. Hyperinflation. You hear the word hyper and you think fast. No. Because the U.S. dollar can run around the world, the hyperinflation is not happening quickly. It's seeping into all avenues and crevices for investing in land, property, and businesses, farm, agriculture, water around the world. It's how it always does it. Anyways, this is time for the question version of this show today. Thank you. If you made it this long in the episode, give us a thumbs up if you like this content. It's been a fantastic year. Thank you all for kind of joining along the journey of our pivot into more venture capital. We want to start to focus more and more on just high-level research and high-level conceptual thinking. It's good to know where we are in the market cycles, but the prices basically become irrelevant to me. Now, I know that might be a little bit of a sounded like a pretentious thing. Like, oh, Tio, you got enough money, you don't have to care about the price rate. I was like, no, it's an irrelevant part of the thesis. The reason being is they're going to just keep printing. There's no other choice for them. This has happened a bunch. I really highly suggest doing a little bit of historical research into inflationary moments and cycles. It's a frequent thing, way more than you would suspect. So it's helpful to know that we're kind of repeating stuff. The human race seems to kind of repeat similar tragedies. We're just like a broken record. Like ding, 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 ding. It's like the dance of the human race, and our self-interest, and then our interest in others. It's I guess some people would call it the battle of good and evil in the spiritual worlds, but ultimately it's a process of learning. So we're going to do the question and answer moment. Thank you all for making if you're this far into the show now. It's just me ranting and riffing with the live community. So let's see what happens. See what happens here, live community. Bear family. It's been a while. We haven't done a live stream for a little bit. Tryhard's thesis. Okay. Same with all venture capital investments. Tails, I only lose a little. Always start with understanding I'm taking the risk of knowing that my investment here could be worth $0 tomorrow. That's how I start all my investments. Tails, I only lose a little. Heads, I win. If you follow this thesis and you just repeat it every month by making new investments, you're pretty much guaranteed success. That thesis is the same regardless. Now, the fun part is when we find an avalanche, when we find things that we like consistently, we want to invest more in that based off heads, I win. Heads, I win again. Hey, look, heads, I win again. So ultimately, when we're starting with a new thesis, a new vertical, a new niche, a new theme, like the play to earn sector, we're actually trying to make more broad investments because we're learning, and every month we adjust. So each investment I make, I'm willing to lose. Right now, I'm not going to increase that thesis because it's just too early. Wait, patience and delay are one of your most important assets when it comes to making an investment. Not for the investment itself. The investment you should just make today. But patience and delay can provide you a valuable time to do research and to let things come to fruition. But regardless of the price, you should make an investment, just one you're willing to lose. Once you put that skin in the game and you're willing to lose that investment, you'll do the research and you will go through the process of actually learning whether you got it right or wrong. I hope that helps. Okay. Awesome. Joshua Miller says, I can't believe your audience isn't larger. Well, thanks for that. We're just a small, tight-knit community. I'm not super... I'm not super good at being hype. I get frustrated and angry sometimes, and that's probably like my most hype moment is when I'm telling the Federal Reserve Chairman how she is. I mean, I think she's probably someone's like sweet old grandma, but as a Federal Reserve Chairman or something, it's a horrible job. Winter is coming. The den is warm. Accumulation, Bear family. Solana for the win. Yes, we are big fans of Solana. Brian says thinks the dollar idea might be sooner. Could be. I just have a few year feeling, 5 to 10 year. Nice. Thanks for the support, Brian. I appreciate that. Y'all are awesome. What if you have a 3-sided coin? Three-sided coin. Let's see. Gary, $5. Thanks, Gary. Appreciate the $5. Oh yeah. Hey, actually, while we're doing this, let's do the Kiva. Let's do the Kiva thing. Kiva is one of my fun parts. Again, for those of you that don't know Kiva, it's fun. I highly suggest it. If you like tech and finance, like I do, I'm always interested in innovative ways and creative ways that people are helping out. So we're gonna do a little Kiva thing here. Because Gary gave us $5, I gotta log in and remember how to log in here. Ladies and gentlemen, just give me a second here. We've got this. We've got this. Don't worry. It's going to be okay. Trust your governments. The governments have always had the people's best interests in mind. Okay, hot damn. This is going to be fun, ladies and gentlemen. Let's go. Okay, so here we go. This is our Kiva portfolio. So we've got $1,527 that we can lend out. So this is fantastic. So far, we have lent out $5,000 and $2,000 of those loan.com/Kiva, and you sign up for Kiva and you participate in this fun little adventure into social impact financial technologies. Let's see, where is it here? Oh, there's the Arcane Bear. Impact, here we go. So when you guys join under those links, it calculates all the loans that we make together. So the Arcane Bear family, since we started doing these, we support Kiva because we think they're awesome campaign sponsored by me. You guys have also lent $15,000. So of all this capital that's been lent out to entrepreneurs, 85% of them are female. Well, that's probably smart. They're much more likely to pay the loans back. Males are much more likely to lose the money trying to build a business. But that's okay. The 10% that get it right out of those guys usually make some pretty awesome stuff. But so mostly females. Mostly in agriculture, good choices. People need to eat. Also in food. Agriculture and food is a pretty big deal. You guys are making smart choices here. I like this. 384 loans, 18 loans this month. That's 5 loans per member. 69 team members. Give yourself a round of applause for that. Ladies and gentlemen, we got to get ourselves up to 420 loans. And just, how about no more new members sign up? Just more loans from the already existing members, guys. Don't screw with this. Or how about we go to 6.9 loans per member? Yeah, there we go. That would make it savvy. So what we're going to do today is we're going to go through this last part. We'll do a few more questions at the end. So on Kiva, what we can do is we can find different entrepreneurs around the world. So the $1,500 that's in there right now has actually been from loans that have been paid back. So find a borrower, women and agriculture. Let's just start with agriculture, and then we'll go from there. So we could lend out to a few people. So this is kind of the fun aspect here. So let's just fill out the 100. Let's here we go. You click on Joyce's story, and see a loan of $900 helps to buy inputs for her farm, such as fertilizer, seeds, to improve her crop production. Now, I wish this didn't say hybrid seeds, but this is just my own silly, stupid person. So we're going to give her the whole $150. So, borrower story. This is fun. So Joyce is a 42-year-old mother of 5 children. Nice, Joyce. Good work. Happy mother. They live in Eldoret. I have no idea where that is. That is a town that is stuck in a crisis from 2007 to 2008 when violence occurred in Kenya. She works very hard to employ good practices on her farm. She has faced many obstacles, but they have not been setbacks because she has been making great profits from farming. Nice. She's doing great. So in Kenyan agriculture, this is one of the most competitive industries due to the high cost of observation. So she's, again, seeing this money. She hopes that she can revive of her children going to school. Well, hot damn, we want to help that idea. We love that you want to grow food and have a family. So we're gonna, what a great way. We get the capital back. So here actually too, just for more insight for you guys, seeing as we're kind of giving you can learn more about how Kiva works here. So here's her, like the loan. It'll take 20 months for her to pay back the $150. It's a little bit every month. It's like a few dollars every month. It comes from these dates. It's a flexible model. Yeah, of course we don't even care. Don't even pay us back. We don't even care. Like if you can't pay us back, that's fine. Like this is really just to help out. But what's good about it is, again, this $1,500 that's in the account right now is actually mostly from what we've been paid back. So this is a really easy one to make. We could probably do this a few times. So I could go through and just actually what we're going to do is we're just going to pick a few people. We'll do it again here. We'll do what you guys are all here. We'll pick a few people. Find a borrower, agriculture. Can we pick multiple baskets? One. Okay, well, we'll just show you the process then. We will I'll go through and do it myself later. But we'll just show you the process. So you complete the order. So here, again, you can choose to make a donation to Kiva, which again helps them be the nonprofit business they are. So you make a donation to Kiva, and the loan is flat, effectively. So the entrepreneurs are given the loan with no interest rates, right? So it's a very favorable loan term. Like you pay us back with no interest, right? And often entrepreneurs they're working hard to pay people back. Like generally, a good entrepreneur will always do that. It's just you got to be patient sometimes. So they have a really high non-deferral rate. It's like 98, 99% of all people pay their loans back. It's freaking amazing. So anyways, super exciting. You can set it on recurring. And just like that, you've done a little bit of monthly good. We helped Joyce work to achieve her dreams as a mother sending her children to school. And then again, yeah, you can just drop in, try it out. Anyways, I don't know. I love Kiva. Check him out. Nicholas Evans with the $20 super chat says, Analogy is innovating on the blockchain, making it improve so that people can track without needing gas fees. It's low right now, and I think it can make riches. Yeah, we're always looking for new innovative ideas. It's hard to say, though. The technology one is a hard one. There's a few great race cars out on the track. Awesome, ladies and gentlemen. I'm going to address one of the questions here just for fun, because some people are actually pretty uneducated about this. Andreas Ort says, is it good to help African women have more children? That's just such an arrogant question unto itself. Such hubris and arrogance. That type of thing is like pretty grossly disgusting. Like you should be ashamed of saying it, first off. Now, I'll give you a really clear reason why. We're actually underpopulated. The whole idea of the Earth being overpopulated is bullshit. No, what we do wrong is we too densely populate, and then we do stupid shit like can't give up plastic because we're addicted to cheap free shit. It has nothing to do with population. This is a much deeper philosophical question about why there's so much plastic. That's probably the only reason why we're here. Anyways, yeah, we're way too we're way too low on population. Elon Musk has some great and also hear what DJ Wisdom is saying. Children are freaking gifts of wisdom, of the nature of the playful adventure of the universe and its extravagant adventure through this galaxy. So yeah, don't underestimate the importance of new life. Anyways, to you with the Arcane Bear, give us a thumbs up if you like this content. Thanks for joining us in this live stream. I keep trying to tell myself I'm going to make more content, and then I just don't, because I'm like, well, we'll get to the point one of these days. I could just keep telling you the same thing every day, but I'm not sure how that would go. Anyways, this is always fun. I have always a treat. Oh, by the way, we've got a few things coming for the end of December we're excited about. We've got a podcast with Avocado Guild. We've got a podcast with Illumia. We're just going out on a rampage. There's a few other we got tied up in the book right now too. There's so much exciting stuff happening in this sector. I love the bull market. The bear market will probably be pretty short this time, so we got to we got a good ride here. Anyways, Jordan says guitar outro, bro, rip it. I'm not sure if the guitar is super in tune today. No, skip it. I don't think the guitar's in tune today. Anyway, Two with the Arcane Bear, thank you for joining us. You guys are freaking awesome. Join the private group, or I'll sue you. Sure, legal, I can say that. Okay, I won't sue you. I'm just kidding. I just wanted to be like Mr. Beast. I thought Mr. Beast is so funny. Remember, everyone, this is do what your governments tell you. They always have your... Just read in history. Governments always have your best interests in mind. It's super simple.